Hello again. This is Josh Kahr at the Real Angle, and today I'm speaking with Michael Meredith. Michael, how are you doing today?
I'm good. It's an interesting day. I don't want to timestamp this, but we've got a once in a I think 10-year thing going on with the eclipse and in New York, and so it's a good day.
We do, and yeah, unfortunately, it does timestamp us, but that's perfectly fine. We are definitely recording on April 8th, which is the day of the eclipse, and exciting stuff. And we're on a bit of a time crunch because we want to get this done before the eclipse happens.
That's
So
right.
that's exciting stuff. Um, so before we get started, just for listeners, Michael's the CEO of VPG Enterprise. I always like to get the web address out at the beginning. That's VP as in Paul G Enterprise.com. So yeah, let's get into it. What is VPG Enterprise? How did you start it? All that kind of stuff. Let's get into it.
Yeah, so VPG Enterprise, we're vertically integrated real estate company based here in New Orleans. And my background is actually in petroleum engineering. So that's what originally brought me to New Orleans,
Sure.
drilling offshore deep water wells for oil and gas company here. And decided that I was looking for a way out of corporate America and
Hmm.
started investing in small rental properties here in the greater New Orleans area. And have just since, organically grown the company from, those small multi-family units to more institutional and affordable housing developments here in the greater New Orleans area. And along that
And when,
way, yeah,
just to ask, when did you start investing?
that was in 2011. So we bought our first property in February of 2011. Never forget that. A little four
Sure.
unit building in Chalmette, Louisiana. And that is where the birth of VPG started.
That's exciting. That's exciting. And now, when you started this out, was it just you? Did you have a partner? Is it the same partner? What's the
Yeah, same
background there?
partner. Andre and myself, we've been best friends since we were 18 years old. So literally, boys to men,
Sure.
story here and growth. And so we have, I would say, different skill sets, different roles. If you subscribe to the rocket fuel and traction, base, I'm the visionary and he's the integrator. And then in
Sure.
2015, we brought on a another partner on the construction side of our business, Vince, who was another frat brother and best friend of ours. And he really heads up our construction arm of the company, which is probably one of the fastest growing as well too.
So you got into so you started. That's interesting. So you started on the investing side, and then
Yes.
construction was something you bolted on later. To be honest, that's not usually how I see it. A lot of times I see
Yep.
people, they were contractors, and then they said, "Oh, I'll reinvest some money," and they kind of went the other way. Why did you expand into doing construction? What was the driver behind that?
Yeah, a little bit of that was necessity, right? Is we were very, very early on, trying to make some projects work, right? And
Okay.
we had some skill set and what some of our smaller GCs and go alongside of us, and we need to get better pricing and kind of control the process. So we started doing it ourselves on small rehabs and
Hmm.
small new constructions, and then as we got in, we said, well, we want to maybe look at doing this for other folks, right? We get this day every day. Do you know any good GCs? And we wanted to figure out how we formalize that in a market that, in particular, was very, very, I would say, limited in minority, general contractors, right? And
Sure.
so we saw an opportunity to create a niche in a market that kind of formalized that from a mom and pop to a more institutional funded type of construction company. And we set that basis out in 2015. And I think it's definitely been a growth mode, right? It takes a lot to get the engine of a construction company off the ground, but we've started to see those successes manifest. Definitely 2023 and in our pipeline for this year as well too.
And I will make a note for the audio listeners, not the video listeners, because you did mention, minority set asides, if you will. You're African American, so I just
Yes.
thought I'd throw that out there because with video, it's not audio, so it's just saying,
Right.
just say. Normally, I don't feel the need to note that, but I'm
Yeah.
noting it today for obvious reasons. Um, no, it's interesting the construction side. I mean, not to get into my own life story by any means, because I'm really here more to talk about you. But early on in my career, I worked for a firm that got into doing a lot of environmental remediation work because they got a quote from a contractor that they thought was offensive, and then
Yeah.
said, "Well, heck, for that much money, we'll do it ourselves." It sounds like you had somewhat similar experiences and figured out, well, heck, we could just do this ourselves.
Yeah, correct. And I think it's value add for projects and types that we were doing that had heavy rehab. That maybe we're in some areas that weren't marketable to other GCs, and so those arenas I think made it definitely more marketable for us to go and pursue that, and made the value case something that made sense for us and something that we wanted to invest in and grow as well.
And from market wise, I mean, you've been focusing. I mean, you're still in the New Orleans metro area, if you will. That's the market you're in,
Yes.
and construction too. You stayed in that neck of the woods.
Well, on construction, we've actually had the opportunity to expand geographically. We're a federal, was an 8A contractor, so we do work federally.
Got
And
it.
so that has brought us to Miami, to Texas, to Arkansas, Oklahoma on projects that the federal government has asked us to do. So, we're more traveled on the federal side, but most of our private work and municipal work is kind of in the, you know, 2 or 3 hour radius of New Orleans.
No, that's interesting. Yeah, with the federal stuff, once you're in their queue as an approved vendor, I guess, you know, not going to turn down good work. So that makes a lot of sense. That makes a lot of
Yep.
sense. It's interesting. So, I mean, so right now, as far as the properties, I know from your website it says, you've got 500 units and what have you. I can see that. I assume that's close enough to reality, about 500 units.
Yes.
Yeah. So just checking because sometimes websites don't get upgraded. And it's all apartments, or do you have any retail and office mixed in there, or it's just apartments?
Yeah, so right now it's all apartments. That's kind of been our bread and butter. We are transitioning into, excuse me, mixed income and mixed use projects. With the master development that work at the River District. But our bread and butter has really been, B, C class, value add, type of deals, and then transitioning, I would say over the last couple of years is buying legacy law tech assets that are either close or coming out of compliance, and us continuing that affordability, moving forward.
And then with the low income housing tax credit deals that you're buying once they get out of compliance, and for those people who don't know, of a low income housing tax credit deal, you got to maintain the income rules for a certain number of years, but then after those years are up, all bets are off, so to speak. So then are you resyndicating those again as low income housing tax credit deals, or are you making the market rate? What are you doing with
Yeah, for us, we are buying purely on cash flow, right?
them?
And the purchase price has got to,
Okay.
to to follow that, right? And so we do see a lot of folks who are targeting these deals and maybe paying a premium because they're anticipating some type of resyndication. But our model has been to buy on cash flow and
Okay.
keep the affordability for at least the next 15 years, because they've got the first 15 years, which is kind of your hard, IRS, where they can
You
slap
have
you
to
on
keep
the
it.
end. Yeah, the next 15 years is really um, monitored by your local housing agency, whoever that is. For us, it's Louisiana Housing Corporation, and the risks are not as great, or penalties are not as great, but we still do keep that affordability through that period, and underwrite as such.
Got it. So then you're just buying it for cash flow like anything else. The
Correct.
income is limited because it's still restricted, but and then I guess at the end of the 15 years, I mean markets like I don't think New Orleans has like rent control or anything. So at the end of year 15, in theory, you could go to market rate at that point.
Correct. Correct.
Interesting. Interesting. Of course, that assumes you're going to still own it in 15 years, which is a bit of the way out. So, as far as deals you're working on now, I mean, are you looking more for value add turnaround stuff? You're looking for raw land that you can take through entitlements? What rings your bell, so to speak? What do you think is most interesting in the market today?
Yeah, I mean, I think for us, we've grown where, we're still looking for value add stuff. Maybe not as heavy in some of the thing that we did in the past. But we are still early in our trajectory where, we're still trying to find assets that we can create upside for, our equity investors, right? We're, looking for solid markets, solid sub markets, but still either operational or management somewhere we can form our integration into to creating value. So that's kind of number one. And number two is looking for public private partnerships
Mm,
with patient partners that are have multiple means of addressing their returns other than just price, right? And so how do we impact public institutions, through our development um, experience and creativity is something that we've been targeting as well too. It's evident what we're doing at the convention center, and we're talking to several other partners on how do we incentivize impact on these developments.
right. And since you're so focused on the market in New Orleans, I imagine you're able to have better conversations of city leaders and community groups about that because you're committed to the market. It's, from my perspective, that's always the challenge of some of these big name developers is they come into a smaller city. Not that, New Orleans is small, but it's not Miami, right? They'll
Yeah,
come into a smaller city, and then the local leaders are like, well, who the heck are you? You're this big player out of Miami. You're not of our people, if you will. You're not of the community. So
yeah,
that's
and
interesting.
I say that's amplified in New Orleans and just how our city operates, our politics operates. Not to say it's unique, but it is amplified for sure. And some of the things that you mentioned there.
No, I have a close personal friend who's a New Orleans native, and we've talked. There's quite a bit of hometown pride, which is deserved. I mean, it's a lovely city, but
Yeah,
there's definitely there's New Orleans, and then there's not New Orleans, and
correct.
that's definitely when I talk to him, that's the way he sees the world, and that's okay. I'm a New York City kid, born and raised, so
Yeah.
I get it. A lot of hometown pride. Um, it's interesting. So I like the story about how you're growing. It's interesting to talk to you also in the way you're phrasing it because a lot of the some of the words you use talking about sort of I forget the exact phrase you used, but it sounds like you more view yourself at like the beginning of this journey, if you will. Um, so I guess fast forward, like not where's the end of the journey, but rather what 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 do you want to be when you grow up? Like if we fast forward a bunch of years down the road, like what does this entity grow into? I guess.
Yeah, I mean, I've shared this, and proudly, our vision is to be $1 billion real estate company. To be able to have $1 billion in assets. It's kind of our guiding star, and
Sure.
along the way to be able to invest in, higher class, less risk adverse, or less risk involved projects, right? And
More
I think
stable stuff. Sure.
yeah, correct. And I think that that is the trajectory of where we've got to. I think to this point, right? Because when you start with no capital to invest, you kind of just got to get into projects and build experience, and that kind of grows along the way. But our goal, even as we have gotten a chance to get ourselves involved with some more institutional partners, is to continue to grow that experience to where those partners see us as less risky, right? And then the capital follows as such. And so I think that is kind of you know the next steps for us is to continue to perform, to continue to do what we say we're going to do on these projects, and then be able to grow in a larger less risk projects and have capital that is adjusted to that as well too.
So I'll ask this because you mentioned risk. Nothing ever works out as expected, and you've been doing projects for a few years now. Um, any good recent good or bad surprises you had on a recent transaction, or I'd say as you've grown, like what did you find surprising about your firm as it grew?
Yeah, I mean, I think I would talk with just market in general for us, right? It's one thing to hedge or to try to deal with a volatile interest rate environment, right? That's something I
Hmm.
think that nationwide folks are just adjusting to, right? But over the last, I would say, 18 to 20 months, we've seen our insurance triple to where we were paying, somewhere around 750 a door to, uh, you know, upwards of 2,000, twenty two
Yep.
hundred a door
Yep.
for insurance. And so, I think in that aspect of things, it really, you have a good feel of your numbers, right? You
Hmm.
think you
Hmm.
do, but when you got, an additional expense like that that's uncontrollable, you really start to dive into your process and systems. And you got to take your portfolio off autopilot, right? You got to grab the wheel. And what I did learn about our organization and our asset managers and our property managers, boots on the ground, is they were system followers, right? And that's
Hmm.
good because those systems are good when you have good air conditions, but they're even better when you've got turbulence. And so I think we saw a lot of turbulence, and everybody did. But I think at that point, I was very proud of our team to be able to really hone in on those systems, hone in on the nickels and the dimes, because all of those counted. And now we're starting to see a little bit change in that trajectory where insurance is starting to go down. And those properties have kind of been able to ride the wave and now become more profitable. But you know, and at times when you go from 750 to 2300, the plane is shaking and the captain's on the microphone. I don't think the mask came down yet, but everybody was definitely locked in.
No, it's look, the insurance companies, they all they do all day is stare at data, and they're not making a political statement, they're not making a science statement, they're just saying, look, the odds of something going horribly wrong has gone up.
Right.
You need to pay us more. That's it.
Yeah.
That's it. And no, I've had very similar conversations with people in Florida. I mean, up in New Jersey, which is where I'm currently live, New York City kid, as I said, but live in Northern Jersey now. Um, we've seen insurance rates definitely go up because of hurricanes, but obviously nowhere as much as you guys. But at least for our neck of the woods, Hurricane Sandy woke up everybody,
Yeah.
and it reminded everyone, hey, these hurricanes can hit hard, and when they do, it damages a lot of stuff. It's not even, I don't want to say forget about loss of life because I don't want to trivialize loss of life, but the insurance company is really looking more at the economic impacts,
Correct.
not people dying, but rather the flooding damage and all that sort of stuff. No, it's substantial, and unfortunately, a lot of buildings. There's a huge amount of housing stock which just was not designed for this because who would? Who would? No, it's interesting. So yeah, the insurance thing definitely that's a surprise, and having those systems in place and building those systems is key. Um, as far as like, I mean, the debt markets have been weird. I know up in my area, community banks have pulled back a lot. There's a real lack of availability of debt. Um, as far as equity sources go, the deals you've done, I mean, the early stuff, it sounds like it was you and your partner, but are you raising money in syndications? You working with institutional equity? Like, how are you funding stuff these days, I guess?
Yeah, on the equity side, it's a little bit of both, depending on where the capital raise is. We've traditionally been kind of a family and friends syndicator.
Hmm. Hmm.
It's because
Hmm.
when you're in a value play, you kind of want some of that flexibility, to be able to make that happen. But more recently, we funded our deals with private equity firms, impact funds who were looking
Cool.
specifically to invest into workforce and affordable housing. It's easier to deal with one check, for us, and gives us enough powder to go after big deals and more predictability. So I think that is where our trajectory is, and to continue to find more firms that value that here in kind of the Sun Belt region, around multifamily assets.
Got it. Got it. No, and that makes sense. I mean, there's it's working more institutional equity. I hear that and I respect that. I've done the traditional syndication model myself, and you're managing a lot of different people, and
Yeah,
unfortunately, everybody calls you at the same time and says, "I just need 5 minutes of your time," and then when you add up 20 people, it's 2 hours. So
yeah,
that's a problem. That's yeah, and again, and I respect that. I mean, look, if it's my money, obviously I want you to pick up the phone because it's my money, but
yeah.
still, it's a challenge. So, as far as where you grow towards, we talked about the growth process. I guess one more question I wanted to throw out there, and then I've kind of hit on my high points. Um, so you're working in New Orleans. I understand New Orleans is culturally unique, and I get that because it is culturally unique. What do you think from a real estate standpoint? Is there something about the New Orleans market that is different than some of the other markets that maybe you've played in?
Yeah, I think, if you look at it geographically, most people don't realize that, New Orleans is almost an island, right?
Hmm.
The way that the river runs through it, it separates itself from some of the major, northern cities, like Slidell and Covington, and, you know, even from the Jefferson Parish, right? It just it's not a city that has an opportunity to sprawl like an Atlanta or a Dallas or a Houston. And so, there is kind of this limiting land opportunity that exists, right, from a
Hmm. Hmm.
scale perspective. And then, you also have, just you match that with the dynamics of an economy that is built on tourism, and the median income doesn't match up to some of like these market rate markets across the board, right? And so you have very limited opportunities, but yet very limited economic drivers that would make these deals palpable, right? And so
Got it.
people are wanting to do deals, but at the same time, it's like, okay, now I got it. What do I do with it, right? And
Sure.
so I
Sure.
think that is a little bit of a dynamic, and you mix in just the political landscape and those pieces that I think just complicate deals in general. And you have interesting gumbo of of real estate, market dynamics. But I think if you're able to figure that out, there is super high demand for housing in our market. And
Sure.
I think that, there are cultural landmarks and cultural events that literally drive, Jazz Fest
Sure.
and
It's
Mardi
huge.
Gras.
Brings in a
These are
ton of
things
money
that,
to town.
yeah, that drive, real estate opportunities for folks that want to be close to that, even if that's for a couple of weeks a year. So, we're starting to see, I think, a turn, in kind of just opportunities,
Sure.
as folks are kind of coming off of this 2020 2021 fantasy of what multifamily look like, and I think that churn is creating more opportunities for folks like us in a market that is in desperate need of workforce housing.
No, and it's interesting. I mean, you mentioned tourism, like, like I get tourism's a great economic driver, but yeah, but when you talk about actual jobs it creates, it's a lot of low wage jobs. I
Correct.
mean, it's being a waitress. It's not. It's hard to raise a family on that kind of income. But at the
Correct.
same time, it does mean a lot of people need workforce housing, and that's just a ton of people.
Yeah.
No, it's fascinating. New Orleans is fascinating. What were you just mentioning about the tourism thing? Because I mean, there's cities that would kill to have that sort of natural, experiential. We
Hmm.
bring in a ton of people nationally, globally. People travel to a market
Yeah.
like that, um, and that's just not something you can create by, the Chamber of Commerce coming together and saying, "Let's throw an event like that." That takes decades and centuries to develop.
Yeah.
So it is fascinating. It's interesting. So, so yeah. So long story short, you're focused on workforce housing. It sounds like you're moving more into doing possibly ground up development, but
Hmm.
just getting bigger basically. And then I guess my last question would be, at some point, if you're going to achieve your long-term vision, which is being a very large development firm, you will probably outgrow New Orleans just because it's only so big of a city. Um, so, with these federal contracting opportunities you have, you're seeing all these other markets other than your home market that you're heavy in. If you were going to expand, where would you expand into and why?
Oh, that's a good question. I think places that we've been targeting right now have been some tertiary markets like San Antonio.
Okay.
Um, Atlanta is obviously its own market, but there's some tertiary markets, that are there that we're targeting, and Nashville as well too, and not necessarily in the kind of spicy hot, downtown markets, but again those tertiary and also public private opportunities. That's really what's driving a lot of that as we enter in some of these other markets are like specific opportunities, specific relationships that we know we can leverage on the front end to
Right.
be able to have an entry into the market, because it's like you talked about at the very beginning, it's very hard for an outsider to walk in, and get a really good deal, right? You kind of got to pay the foreigner tax, right, to be
Right.
able to get an entry. And so, where we looked at strategically is how do we identify relationships and build relationships in these other markets where we can avoid that kind of foreigner tax on the front
Right.
end, and help us to transition as smooth as possible.
Get your hook into that local market, build that knowledge, work with that
Yeah,
local operator, and then expand. No,
correct.
it's interesting. I've got a colleague of mine who recently did a large deal in Reno, Nevada, and he's from my neck of the woods. And I'm like, well, why Reno? Because it's kind of random. And he's like, well, I've been working with this guy for a decade, and we've done a ton of deals here. And he had a relationship, and dot dot dot. And so now
Yeah,
they're building houses in Reno. And you're like, okay,
correct.
yeah, and that's kind of how you backdoor into stuff, which
Yeah,
again, I think a lot of people who don't know our industry, you know, when we talk about how relationships matter and partnerships matter, I think a lot of people who don't know our industry don't understand that it's not just buzzwords. We're not just saying it
yeah,
because it sounds good on a flyer. It actually it means something. Um,
yeah,
no, it's so when you made the comment earlier about a couple guys you've worked with and that you grew up together, there's a connection from fraternity stuff, all that stuff cannot be overstated how important it is. So it's
absolutely.
interesting. Well, look, I always love talking to guys like you, and by guys like you I mean people who are sort of at that, you're not institutional yet, but you are also not just someone who owns like a few houses. It's that middle ground of becoming institutionalized is fascinating to me.
Yeah,
Well, excellent. Michael, again, thank you for your time. And for those out there on the internet, that's Michael Merideth, CEO, VPG Enterprise. And again, that was VP as in Paul, G Enterprise.com. And I'm Josh Kahr, and thank you again for your time.
appreciate it, man. Thank you.
Thank you.